My colleague, Mr. Speaker,
essentially expenditure alignment and cash budgeting, coupled with complementary budgetary policy, has now anchored inflation expectations, underpinning macroeconomic stability over the past 12 months. As alluded by Professor Kenneth Rogoff, who is a professor of public policy at Harvard, professor of economics and public policy, I quote, "Sound fiscal management is the foundation for economic resilience and transformation," close quote. This insight underscores the critical importance to maintain fiscal discipline as we navigate the path towards sustainable and inclusive growth. The 2026 national budget, therefore, seeks to balance between expanding on the gains of NDS1 while safeguarding fiscal sustainability, underscoring government's commitment to promoting durable and enduring macroeconomic stability, characterized by low and stable ZIG inflation. Mr. Speaker, I now want to turn to global economic development, focusing on growth specifically. Global growth is projected to moderate from 3.3% in 2024 to 3.2% in 2025 and to 3.1% in 2026, reflecting obviously slower growth and heightened trade uncertainty and geopolitical tensions. I do have some slides on the screen. If you look up, I hope it's visible to all, you can see a few countries up there, advanced economies, United States, Europe, Germany, China, India, to mention a few, UK, and you can see the growth rates where India is leading the pack with a growth rate of over 6%, followed by China just over 4%. The sub-Saharan Africa region is expected to register growth of 4.1% both in 2024 and 2025, before edging up to 4.4% in 2026. On the other hand, economic growth in the SADC region, which is our region, is projected to improve from 2.6% in 2024 to 2.9% in 2025 and to 3% in 2026. Again, you can see the slide up there showing various countries from the SADC region and Zimbabwe, I think they skipped the other slide, showing a growth of 6.6% in 2026, in 2025 rather, and then 5% in 2026. Strong growth indeed, Mr. Speaker, sir. While this marks a moderate recovery, growth remains softer than expected due to persistent global headwinds, weak external demand, and energy deficits that are afflicting a few countries, and also is due to financing constraints. What I have up there, Mr. Speaker, is a chart showing a global inflation which seems to be headed downward. This is positive. It may mean that global interest rates beyond 26 will come down, making it cheaper for us to access loans globally. A comment on international commodity prices. Following several years of volatility, global economic prices are generally expected to move sideways, if not slightly decline. This is in both 2025 and 2026. But I must make an exception in the sense that a gold, which is silver, the precious metals are faring better than they're doing very well compared to basic metals. You can see the chart, therefore, precious metals are sticking upwards exponentially, but the very well compared to basic metals. You can see the chart, therefore, precious metals are streaking upwards exponentially. But the prior chart, which was showing the oil price, was curving downwards, which is good for us since we're a net oil importer. Now, let me turn to the domestic economy, the Zimbabwe economy. Mr. Speaker, sir, the domestic economy exhibited strong performance during the first half of the year, which is estimated to have grown by 8.1%. You can see in the first quarter of the second bar from your right, Q1, the economy grew at 5.1%. In the second quarter, which is the last bar on your right, the economy grew at 11.04%. The average is 8.1%, so strong growth indeed. The domestic economy is therefore now projected to achieve a growth rate of 6.6% in 2025, as I've already mentioned. This revised projection is primarily on account of strong recovery in agriculture and other sectors such as mining, but all sectors are doing well. They are all in positive territory, Mr. Speaker, sir. There's a chart with all manner of figures up there showing the growth rates of various sectors. You can see agriculture growing at 24% this year, and then information and communication growing at 12.5%. Those are the sort of star performers, followed by mining and quarrying 7.3% and so forth. Overall growth 6.6%. Following the national accounts revaluation exercise by Zimstat, nominal GDP in 2025 is projected at 52.4 billion US dollars, resulting in a gross national income per capita, or GNI per capita, of 3,200 US dollars per person per year. In 2026, economic growth is projected at 5%, underpinned by the following assumptions. One, expected normal to above normal rainfall with irrigated cropping expected to boost the performance of the agricultural sector. Two, currency and exchange rate and price stability. A prudent fiscal policy and tight monetary policy will anchor the currency and the exchange rate and inflation stability. Three, focusing on steady international mineral commodity prices. Most commodity prices are expected to moderate, except for gold prices. Low fuel prices will reduce the domestic cost of production, while higher prices for gold will promote further mining sector growth, increasing foreign currency inflows. And finally, on the ease of doing business, Mr. Speaker said, the ongoing review and rationalization of the various licenses, fees, and charges is expected to continue, with the overall impact of lowering domestic costs of production and doing business and improving national and global competitiveness for our local products. Let me turn to inflation development, Mr. Speaker, sir.
Mr. Speaker, inflation developments in 2025 reflect the cumulative positive impact of prudent fiscal policy, sustained tight monetary policy, and proactive money supply growth management by the central bank, the RBZ. In terms of inflation, month-on-month ZIG inflation was minus 0.4%, while annual inflation was at 32.7% in the month of October 2025. The figure for November came out yesterday, Mr. Speaker. Month-on-month ZIG inflation is at about 0.2%, and then year-on-year ZIG inflation is at 19%. So I'm confident, Mr. Speaker, that before year end, you will see an inflation level of closer to 10% and single-digit inflation in the first quarter of next year. And if this happens, Mr. Speaker, that will be the first time we've achieved that kind of single-digit domestic inflation since 1997. In 2026, the ZIG annual inflation, let me take that again, the US dollar month-on-month inflation and year-on-year inflation was 0.3% and 13% respectively in the month of October 2025. In 2026, the ZIG annual inflation rate is projected to decline to single-digit levels, reflecting anchored inflation expectations, currency and exchange rate volatility, as well as strengthened monetary fiscal policy coordination. Let me turn to the external sector, Mr. Speaker. What I have there is a chart of the exchange rates. You can see that spread between the parallel and the official rate has remained steady, within the 20% band. That has helped us a lot in managing activities in the parallel market, which have caused us some challenges in the past. Let me turn to the external sector. Mr. Speaker, during 2025, the country's external position improved as a result of significant foreign currency inflows, estimated at 12 billion during the first 9 months of the year of 2025. During the same period, exports and imports amounted to $7 billion US dollars. There's a table there showing the various figures. As a result, the current account surplus was at $961.3 million US dollars during the first 6 months of 2025. This is compared to 31 million recorded during the same period last year, 2024. A massive increase in the current account surplus. To year end, the current account surplus is projected at 1.3 billion US dollars. This surplus is expected to further increase to 1.4 billion in 2026, underpinned by sustained export growth and strong diaspora inflows. Let me say a word about the diaspora inflows or remittances. Diaspora inflows, Mr. Speaker, have remained strong in the main, reflecting global economic strength and recovery across major regions of the world, all major regions of the world. Diaspora remittances are projected to surpass 2.7 billion US dollars in 2025 and will be estimated to be at 2.8 billion US dollars in 2026. Again, there's a chart showing the growth in remittances all the way from 922 million in 2019, and with the projection of 2.7 billion in 2025 and 2.8 billion in 2026, up on the charts. Let me turn to public finance developments, Mr. Speaker. Mr. Speaker, revenue collections during the period January to September 2025 amounted to 156.3 billion ZIG, while expenditures were at 152.5 billion ZIG. With the fiscal framework right up there. On a cash basis, revenues which exceeded expenditures by 3.7 billion were utilized for partial repayment of some of the outstanding government loan obligations. In US dollar terms, revenue collections amounted to 5.9 billion against expenditures of 5.7 billion US dollars. As at September 2025, various ministries, departments and agencies had utilized an average of 56% of their allocations. However, due to the actual exchange rate outturn of 26.7 ZiG to $1 US, compared to the assumed budget exchange rate of 36 ZiG to $1 US, which we used when we did the budget last year, actual average utilization stands at 75% across our various MDAs. What does the fiscal outlook look like to year end, Mr. Speaker, sir? Cumulative revenue collections to year end are projected at 215.7 billion, or 7.96 billion, which is really close to 8 billion, Mr. Speaker, sir. This is against expenditures of 219.46 billion ZiG, or 8.1 billion US dollars, resulting in a projected budget deficit of 3.8 billion ZiG, or 140.1 million US dollars, which is 0.3% of our gross domestic product, GDP. Coming to public debt, Mr. Speaker, sir, the country's stock of public and publicly guaranteed debt was 622.3 billion ZiG, or 23.4 billion US dollars, which is about 44.7% of our gross domestic product, GDP, as of the end of September 2025. Let me turn to the 2026 national budget macro fiscal framework, Mr. Speaker, sir. Mr. Speaker, sir, in 2026, government is targeting to collect revenues amounting to 288 billion ZiG, or 16.9% of GDP, or about 9.4 billion US dollars equivalent. The revenue envelope, coupled with the government's borrowing capacity, provides for an overall global expenditure amounting to 290 billion ZiG, or 9.5 billion US dollars, which translates to 17% of our GDP. The projected revenue collection and expenditure ceiling results in an almost balanced budget, with a small budget deficit of only 3.2 billion ZiG, or 105.9 million US dollars, or minus 0.2% of GDP, all within the static target of 3% of GDP, Mr. Speaker, sir. A word about domestic partners who have supported us. Mr. Speaker, sir, the country received development assistance amounting to 386.1 million during the period January to September 2025, against a target